Hi everyone, welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. Everyone seems a little disappointed Tesla didn't make their delivery target of 500,000, despite coming in at 499,550, i.e. 450 cars short of the target, or less than 0.1%. This number is also conservative, as they only count a car as delivered if it is transferred to the customer and all the paperwork is correct. Final numbers could vary up to 0.5% or more. So I think with that rounding error, Tesla would have hit over 500,000 deliveries for the quarter. So Tesla actually will make the delivery target for the year. Everyone talks about deliveries as if this is the main metric that matters, and the company's value is based on this number. But is it? Wouldn't the actual number of cars they can manufacture be a more important number? Of course it is. But Wall Street seems to care about the actual number of cars delivered for the quarter. Why? Because they will be on the profit and loss statement for the quarter. Any cars produced that aren't delivered will have to wait until next quarter. In other words, the numbers Wall Street cares about are profits, not cars produced. The cars delivered are the ones that give the profits. But if you're a long-term investor and you care about the growth of the company, then you may have noticed that they actually produced 509,737 cars in 2020. That's nearly 10,000 more than the target. Oh, yes, and this was achieved despite a pandemic, with factories being closed down, and production literally halted. Absolutely unbelievable. So please don't focus on the delivery numbers. Let's go into the production numbers, as these are what really matters. In the third quarter, we had 145,036 cars produced. On the fourth quarter, 179,757 were produced. That's an increase of almost 35,000 cars, which is a 24% increase in just a quarter. Now, this fourth quarter production number is very important in my opinion, as we can use it to determine the current run rate. What we need to work out is what their run rate was at the end of December, as good a guess as we can. So how do we determine what the ramp-up rate will be? Well, I'm going to work linearly here, as I think that is the most realistic, i.e. at this stage we'll assume even progress in increasing production. If we divide Q3 production rate by 3 and Q4 production rate by 3, it gives us the average run rate per month for each quarter, which is 48,345 for Q3 and 59,919 for Q4. You may have seen in the previous screen I had calculated average monthly production rates for each quarter. Each quarter has 3 months, so we use this average as the middle month for both quarters, and then we can linearly work out the rate of improvement. By subtracting the monthly average of each quarter, we're left with a discrepancy of the two of 11,574. Now, we placed the average production of a month in the second month of each quarter, and we can work out the month-over-month increase in production by dividing the discrepancy by 3, because they're 3 months in a quarter, giving us 3,858. Therefore, we'll use this number to assume the increase in production month-over-month through Q3 and Q4. Now, if we take the assumed production number in the third month of Q4, we reach an estimate of 36,770 cars produced in December, which would be the average of 59,919 added onto the increase of 3,858, giving us 63,770 estimated production in December. Of course, this is an average of December, and it's going to be higher now. In other words, there is a high probability that Tesla's existing run rate is over 64,000 cars a month. So let's just clearly understand this. They're 12 months a year. 64,000 times 12 equates to 778,000. That is what Tesla's current run rate is at today, and that also includes downtime for improvements and enhancements. However, if anything, they're ramping up exponentially, so I believe this figure to be an accurate minimum number, and I should hopefully still be considered somewhat conservative. Tesla's target is 50% growth year over year. In other words, 2021 target is only 750,000. The funny thing is, Wall Street doesn't even think Tesla can achieve that, yet their current run rate is already above that, with 3 new factories coming online this year. It looks like they've started an impressive path to 2021. Now I have the correct delivery numbers, I can get started on my 2021 production estimates. Anyway, well done to all you investors out there who held through the year. Just be sure to hold through this one too. Thanks for listening, hit the thumbs up, and please don't forget to subscribe.